After 2 days of gains, broader averages lost ground yesterday, although our next guest says the bottoming process may have already started. Mark Newton is global head of technical strategy at Fundstrat. And Mark, I think you go even further than that. You think we may have bottomed out last week. What are you watching that tells you that?
Hi, Becky. Hi, Joe. Good morning. So there are a couple of things that are interesting that have recently just happened in the last week. We're starting to see evidence of fear actually turning to capitulation. And when I say that, I mean that not only have we seen the inversion in the VIX curve, but recently we saw last week the equity put-to-call ratio now is right close to 1, and it registered a 0.95 last week. And so normally when you see a level of puts that are being bought similar to a level of calls, you're getting towards a level of fear that normally coincides with a bottom. You follow that up with this past week, we saw last Friday and Monday what we call a 90% up day, or more than 90% of all stocks were in advancing issues versus declining. So normally after a steep decline and we see evidence of not only some capitulation, but also now some decent movement to the upside, it means we're getting very, very close to a low.
Mark, Tom Lee, I think, was channeling you on that Monday when he was on, and he got some flack. He tries to be too exact with calling tops and small moves, but he was early in terms of calling a bottom, and I think he was saying that you saw some of that on that Monday. And I think he got pretty close, because by that Friday, it looked like maybe there was some stabilization last Friday. Do you know what I'm talking about? Did you see Tom come on and say that technically, I think you thought the market would bottom that week?
Of course, Joe. Look, I watch all your shows, you know, like just like everybody. But look, I make a couple of points. I think that
you're coming back.
Not only sentiment has gotten so extraordinarily bearish, but we haven't really seen the movement in high yield like we see normally if we're going to see a true market sell-off that normally sends real widening out in junk bond yields, the spreads compared to treasuries, and that's one thing. So everybody has gotten so enamored about tariff that I think so much has already been built in that honestly, I don't think the economy nor the earnings really justify this level of fear. And I think that's important. So breadth has actually held up better than what we saw at the January lows. When we look at things like percentage of stocks above their 50-day moving average, for example, or above their 10, we never really got to those levels.
That's what I would say, too, Mark. That you talk about capitulation. It doesn't feel like there was enough of a sell-off to have capitulation. I think of a 15-20% pullback before I really think about somebody throwing in the towel on stuff.
What Tom will tell you also is, look, valuations have come in much more favorably now in terms of being in line with where things should be trading. And technology is still going to be the largest profit center for 2025. So I know people have said, well, the Mag 7 trade is dead. They've become the Lag 7, but I just don't think that to be true. So yes, of course, now we're in, March Madness in more ways than one. But, technically, a lot of these charts still look in great shape on an intermediate term basis. We've seen 20-30% sell-offs on a lot of really key names. Many of these are now, their valuations are in line. We're seeing levels of fear, but we haven't really seen sufficient. It's been an orderly decline. It's been very concentrated, and it hasn't really been the kind of larger sell-off in risk assets that would lead me to think that we're entering a bear market. So, look, this is a garden variety type decline. I know it's been very extreme for those that are not diversified outside of technology. There are plenty of things that are working. Outside the U.S., we have precious metals, treasuries, but in general, this should be a time, seasonally speaking, where markets actually bottom after sort of a rough first quarter. That always happens normally in the first year of a presidential cycle when a new change of administration happens, regardless of tariffs. Markets have a rough January, February, March, and then we bottom and turn higher. So I think we're very, very close, and it very well could have happened last Thursday morning.